Sound testing. Check. Right. Hey all, welcome to ShareTreck. This is Raj here. Good morning, David. Yeah, this is not the kind of market we want to be in, but this is a good advantage to make money. Shorts on the way down and longs on the way up. So I wish you a very nice day, David, and I hope you make some good money today. Let's start off with our dashboard right now. And David, can you hear my voice? Just wanted to check and see if my voice is coming through. You could just put a chat message saying yes. My meter indicates it's on. It's going well. Okay, so here is my dashboard for today. Fear and greed index at 66. Treasury yields are flat as investors are trying to understand the China-US deal. And I don't know what's there to understand in it. It's just a postponement and temporary relief. I have some more details in today's dashboard about the tariff. The US is going to boost Saudi AI chip access even as China issues continue to linger. So with the fears that were expressed by US earlier about proliferation of AI chips, it was felt that probably US would limit powerful chips to stay within the United States and prevent other countries from having AI capabilities. But now it seems that it's going to be controlled access to different people based on quid pro quo. I hope the same thing happens for China as well, because China has now removed the ban on Boeing deliveries after the US trade truce. And it has also, US has in turn slashed the de minimis tariff on small China parcels to 54%. Even though the slashing has been done, it's still 54% more expensive than before. That issue still remains, but it will provide some relief to the customers. US inflation is seen picking up in April with modest tariff impact. And US stock futures are down as trade truce rally fades. Inflation data is in focus. As I mentioned yesterday, there is nothing great out here. It's the typical smoke and mirrors thing. And people are starting to realize that the clock has just been reset for 90 days for China. In fact, this adds even more uncertainty because the other countries are under a different 90-day clock and China is under a different 90-day clock. And the good thing out here, in my opinion, is that US is starting to negotiate. This is what Besant told. They're using the 2020 agreement and they're starting from that. So that would mean that a whole lot of work that was done in the past is going to be useful and thereby cutting down the negotiation time. So I'm still optimistic that based on domestic political compulsions, both the countries will come to some kind of a mutual agreement. There might still be tariff, but that is US's problem. As far as China is concerned, it would be able to weather a little extra tariff and move ahead as long as it's not as exorbitant as 80% or 145%. So that said, today, our focus is going to be on core inflation, year over year, etc., those data and CPI data and total household debt data. All of these are going to come in. Business optimism index has already arrived and it's much more, businesses are much more optimistic. I wouldn't say much more, slightly more optimistic. The expectation was for a certain percentage, we came 1% above that. So that's a good thing. Now, I want to talk about the fact that all the indices are negative in the pre-market trade situation. We'll see what happens when the market opens, but I want to spend a little bit of time talking about the impact of higher bond yields. 10-year bond yields are higher, and I'll show that to you when we go to the TradingView platform. But the impact of that is going to be on US corporate debt. I have picked up an old article from December 16, 2024, and I think this article is relevant at this point of time. So US corporate debt hits record mark in Q3 of 2024. This was an S&P 500 article, S&P article, and one of the paragraphs says, among US investment grade companies, total debt has increased across all sectors except for information technology and consumer staples, S&P reported. Consumer discretionary companies led the way among investment-grade firms, with debt rising 24.5% in the third quarter. So IT companies are relatively safe. Now, the reason why I'm bringing this up is because around 1.04 trillion worth of corporate debt has to be refinanced. I've taken some notes here which I want to talk to you about. It says at least $1 trillion in corporate bonds to roll over this year, and likewise for the next 3 years, maybe $1.4 trillion or something like that. dollar investment from abroad will drop as tariffs lock out countries from US market, and therefore they may not have budget surpluses that they used to have earlier, which they used to park on the US treasuries or US stocks. Now that money is going to go away because they won't have the money to park out there. Therefore, US bonds and treasuries will go up. In this environment, corporates which are indebted, which have to refinance corporate bonds, we are thinking of around 1 trillion worth of corporate bonds which have to be refinanced. They're going to be refinanced at a higher price. So now if those companies were planning to do share buyback, they might potentially put that money into reducing their corporate debt instead of doing a share buyback and thereby improving the financial position of their companies. Now, this could hit a lot of genomic companies as well, which have debts. So watch out for all of those things. And that's the reason why I don't like corporate bonds, 10-year bond yields being that high, because it impacts everything. And if you look at the consumer side also, mortgages and everything get impacted by the bond rates. And therefore, the higher the bond rate, the less money available for the consumer to spend, and the less money available for people to invest and grow the businesses. And that's the reason why the 10-year bond yields have got to go down further, and they do not go down until the economy gets much better. So that's my little bit of economics for today. Let's go on to look at S&P 500 futures, which is down 0.20%. We still have this minor line of support here today at 5835.75, which is going to give support. MACD is pretty bullish, and momentum is also elevated with plenty of room for the RSI to move up. So we have to see what happens today. If there's a true realization for the market that this tariff mess is still with us, damage has already been done, and the temporary reprieve may give a little bit of comfort, but at the end of the day, tariffs are still higher. And then I am expecting that we're going to start going down. That's the bearish part of me talking. Same is the case for NASDAQ. Our support for today will be 20,702.50, resistance at 21,287.25, and our MACD momentum, both are looking pretty healthy. Dollar index is pretty healthy at 101, and that I think is a very good position for the dollar to be in, especially with tariffs, because imports will not be that expensive then. And if you look at the 10-year yield, which I'm worried about, we have a projection of the bull candle, bullish flag at 4.750. So the bullish flag target, if it is met, is going to be a big deal for corporate debt as well. Now, today we are seeing a little bit of a drop, 0.63% drop in bond yields, but overall the direction seems to be upward. Now, that said, let's go on and have a look at the index itself. Indicators, go to S&P 500. We are being pushed down by this huge area of supply. And today, I think our support is going to be 5772.47, and our resistance is going to be 5880.35. MACD momentum, both are looking very bullish. In terms of NASDAQ, I think nothing has changed from yesterday. We have our support at 20,330.30, and we have resistance starting at 21,282.14. Next, look at QQQ pre-market. QQQ is down 0.11%, and we have support at around 500.39 and resistance at around 519.42 for today. VIX is looking very benign, and it's got a very good support at 18.16. It's slightly a little bit up today, 0.05%, but I'm not too much worried as long as we are below 20%. Put call ratio is very bullish, and gold is up 0.53% as dollar has given up a little bit of its gains. Now, let us look at our AI stocks and NVDA. I've cleaned up all these stocks because I was getting confused with so many lines and where we are at pre-market. So this is much better. I'll draw new lines of resistance and support as needed. And for NVIDIA, today we are at 123.84 pre-market, which is a jump of 0.68%. Yesterday, I took profit on all my NVIDIA holdings on the US dollar side, and I booked profits, and I'm sitting on the sidelines. For today, the support is 123.40. And if you are looking at kind of a resistance, I would say you would have a minor line of resistance out here. And this is going to be around 128.77. I'm just going to mark this orange, which is our convention for minor line of resistance. And then we go on to Meta. Meta is looking pretty good. It's gained 7.92% yesterday, and today it's up 0.40%. And therefore, our resistance from yesterday now becomes a support, and it acted as a support yesterday. So 630.10 is a support for today. And our resistance, which was at 656.82, is going to perform the role of resistance today. MACD, momentum, both are looking pretty good. There is a little bit of room on the RSI for it to go up further. And in the past, on the RSI scale, we have gone all the way up to 84.37. And therefore, I'm thinking if the market sentiments are good, we'll move up further. And I think that the corporate debt issue is not that big for tech companies, IT companies, and therefore I don't think that will be a risk factor. And this sector will continue to lead the index. And that's my personal opinion. Now let's go on to Google. Google was up 3.37% yesterday, but this morning it's slightly bearish. It's down 0.05%. It's at 159.50. I forgot to clean up the chart for Google, but let us find out where we are today pre-market. So we are somewhere out here in the pre-market situation. So I think for us, a very strong support can be found at 158.10. And then we have a resistance at 164.46. That's the range for Google. And Google is pretty weak at this point of time. But I think over a period of time, it will start picking up. It's at very attractive valuations. Amazon was up 8.07% yesterday. And today in the pre-market trades, it's up 0.40%. And if you look at Amazon, it still has got support at 207.79, and it has still got resistance at 210.10. Apple is looking pretty good. It was up 6.18%, and it still has support at 207.26 because we are at 210.26 in pre-market trades, and we have a resistance at 218.76. MACD is looking good, and momentum is also picking up pretty well for Apple. Now, Microsoft was up 2.40% yesterday. Pre-market is down 0.35%. And if we are to look at where it is right now, it's at 447.67, which is somewhere just below this minor line of resistance that we have out here. So I would say for today, our resistance, first resistance is 447.94. Second resistance is 454.80. And our minor line of support is at 436.49. Friends, I have shorted Microsoft, so I'm waiting for Microsoft to come down. I shorted it because it's at pretty elevated levels. And also we have a huge gap up that has to be filled up. And our RSI is overheated. So I'm looking forward to get some gains out there and take the money out. Now, if you look at Tesla was up around 6.75% yesterday, and today pre-market it's up another 0.29%. So it's somewhere out here at 319.30. So our support is going to be $298, approximately $298.40, and our resistance is going to be 329.11 for Tesla. MACD, momentum, both are looking pretty good. Plenty of room on the RSI to go up. So it's looking good out there. Oracle was up 4.58% yesterday, and pre-market, it's down 0.13%. Pre-market, it's at 157.02, which means we are just on top of this line of resistance at 150.62. So I would say this is the first minor line of resistance for today at 150.62. And the next resistance is going to be somewhere around 157.21. I'm going to mark this as red for today. And these two are the resistances that we are looking at for today. And if we go up further, there will be another minor line of resistance at 162.30 for Oracle. AMD was up 5.13% yesterday, and today pre-market it's up 0.92%. We continue to be within the support of 102.52 and the resistance of 115.02. MACD is pretty good, and momentum is also nice, with plenty of room on the RSI for further upward movements for AMD. So AMD has formed a bullish channel. It's looking pretty good, and once we cross this resistance of 114.71, there'll be no doubt that AMD is on a bullish tear. Now, SMCI was up 4.78% yesterday. It's up another 0.72% today. Our support continues to be 31.08. Today we are at 33.76 in pre-market trades, and 34.81 continues to be the resistance for today. Broadcom was up 6.43% yesterday. Pre-market, it's up 0.27% today. Our minor line of support at 219.20 continues to be the support. And I'm going to move this line out here a little bit down and give you a much more refined line of minor line of resistance at somewhere around 227.52 for today. MACD and momentum are pretty good. RSI is overbought, but we have been much higher on RSI all the way up to 83.76 in the past. So I would say that we can still move up a little bit more for Broadcom before giving up any gains. Palantir was up 0.99% yesterday, and pre-market it's up another 0.31%. And friends, I have been long on Palantir. I have been 3x long on Palantir. That's been a little bit negative. I got a little bit greedy that we could fill up this gap and then we'll come down. And therefore, I bought somewhere out here. So I'm still a little bit on the red on Palantir PLTU, but hopefully today I'll be able to relieve my position and get out of that as well. My approach has been to take out profits wherever I can and have as much cash as possible. And even in the Mag 7 stocks where I had dollar cost averaged, I'm taking out money by selling off the stock, individual bunch of stocks where I had dollar cost average down. So I'm selling the lower cost stocks and taking out my money from there and booking some profits. So that's the way I'm looking at the market at this point of time. I'm bearish. I'm thinking that a downturn in the market is unavoidable. Then we have SMH, which is the semiconductor ETF, which was up 6.27% yesterday, up 0.13% in pre-market trade. Our minor line of support continues to be 233.19 for today, and minor line of resistance at 245.62 continues to be the resistance for us today. Tempus AI, this is for hot dog. It's up around 2.15% as of yesterday, and pre-market it's up another 1.42%. A pretty strong stock. 59.65 is the support for today, and the resistance is at around 64.21, failing which the next resistance is at 68.20. MACD is looking pretty decent and momentum is also up. So I think Tempus AI looks pretty good. That kind of brings me to an end of today's session, and I think there were a lot of comments from David Best, and I'm thinking, let's go through this very quickly. I felt fearful back in January when got out 80% to 85% into cash. It's better to be safe than sorry. And David Best is feeling content. Cracks are appearing before tariffs. Yes, I hear you, David Best. And then you're saying 16-year bull run. I would be doubtful about that. 3 guarantees in life: death, taxes, and cycles. Yes, indeed. David Best is saying under normal cycle, we would have 2 recessions by now in last 20 years. Every 7 to 10 years to purge debt. Fred up liquidity and start over again at bottom. Big time bomb. I agree. What's the ratio to GDP, private and corporate debt? My homework for today. Yes, please let us know, David. That will be interesting to know. And that brings me to an end of today's session. Thanks and have a great day, guys. Bye for now.